Time to talk money on this Monday morning. We're now into the fourth month of the year, and April is Financial Literacy Month. Local financial expert JB Bryan back with us today to explain what that's about, explain risk versus reward. Hi, JB.
Hi, Cheryl. It's good to be here. I like this topic because we talk about investments a lot, but we really don't get to the nitty-gritty of the risks that are involved and how we view risk.
And it is risky. So in your definition, what is risk?
And I'm glad you asked in my definition, because in my old definition, before I really thought about it, I thought of risk as volatility. And all too often, if I did a survey of the room, and our viewers, they would say, yeah, they think that the likelihood of their money going up and down and up and down. But real risk is actually the possibility that you will lose some or all of your money.
Some or all.
That's right. We as investors should really look at, even though volatility is used as a measure of risk, because we don't have a way to really measure risk. But risk really for us as investors is the possibility that if we talk about stock investments, the possibility that that stock will disappear, and have no value at all in our stock that we purchased, or the purchase price or the lump sum that we put into that stock purchase goes down lower. And if that, and a lot of that is determining on what your risk tolerance is.
And that's one of the first things a financial advisor asks you. What is your risk tolerance? What can you do to allow you to sleep at night?
That's right. And I mean, how do you really answer that unless I say to you, are you comfortable with losing money?
Yeah, and nobody's comfortable with losing money.
that would give you a really low risk tolerance.
Yeah.
But you actually, because I know you, that, and most investors and intelligent long-term investors like yourself look at the opportunity, so they're willing to take the risk. So when you're weighing out, especially an aggressive investor like yourself, you look at, I will take on some or a little likelihood or possibility of loss in exchange for the reward that this could give me.
Okay, we got just a little bit of time left. Let's talk about the reward.
Yeah, and your reward with the stock purchase would be that there is an opportunity for it to go up in price, that the stock could actually pay out a dividend if you purchase a stock that has a dividend possibility. In real estate, the reward would be the value of that real estate goes up. So with each investment, there are rewards that are involved. But most importantly, as an investor, we need to really, I want to bring home, is that we need to get in tune with, when we assess our risk, it needs to go with what your specific financial goals are, how much time you have to reach that goal, and are you willing to lose any money, and if so, how much? Are you actually able to actually possibly lose? Of course, you don't want to lose any, but with risk, we must know that there is a possibility of loss.
There's a balance there. And that's a personal decision, too. Every person has a different idea of what their tolerance is.
And most importantly, time frame. Because the more time you have, the more that volatility that exists in a more aggressive investment, that volatility could actually pay off for you.
And that's why we're always rebalancing, because as you get closer to, say, retirement or a goal that you set, then you want to pull that money out of the market.
And that's a way of managing risk. And managing risk would include diversification, and taking diversification even farther, you would go into asset allocation so that you spread your money across asset classes.
Well, thank you, JB. JB Bryan offers money seminars every Wednesday at noon and Saturday mornings at 10 at our office in Glen Allen. The seminars are free, but pre-registration is required. Just go to our website at